Markets are confusing right now. Good economic data, yet stock prices are struggling. Volatility is back, and investors are asking one big question: should I invest, wait, or run for cover? In today's video, I will share how I am treading through these uncertain markets, what I am doing in India, where I see opportunities in the US, and why patience and cash are powerful weapons right now. Hey there, I am Palani, a technologist turned investor and an early retiree. I share my experiences from 20 plus years of investing across US and Indian markets. A quick disclaimer: I am not a financial advisor. This material is for educational purposes only. Please do your own research before investing. Global markets, including India, are facing multiple uncertainties. Ongoing wars, tariff related concerns, and geopolitical tensions are creating nervousness. On top of that, Indian rupee has been weakening against US dollar, and we have seen consistent FII outflows in the last 1 year. What is interesting is India's macroeconomic data are actually looking quite solid. Growth numbers, inflation control, long term fundamentals are intact. But the stock market hasn't really rewarded the stability yet. This, this disconnect is what is making the current phase tricky. Given these conditions, I am personally in a wait and watch mode when it comes to Indian market. I am expecting that the upcoming budget could bring some positive announcement, maybe measures to attract FIIs and tariffs easing in select sectors that could act as a sentiment booster. However, realistically, I don't see a strong, broad-based rally in the Indian market over next few quarters. Returns could remain muted. That said, this is not a time to panic. It is a stock pickers market. Fundamentally strong businesses, companies with profitable growth, strong balance sheets, and long-term visibility are the ones that will create wealth. Not in the short term, not even necessarily in the midterm, but over next 2 to 3 years. Patience will pay. Now, let's talk about US market. Despite global uncertainties, some powerful super cycles are clearly emerging. AI, aerospace, and the massive demand for power driven by AI infrastructure. These are real long-term opportunities, and I am selectively holding or adding to US stocks in these spaces. On top of that, upcoming announcements on new Fed and potential rate cuts could provide some more boost in the coming quarters. That said, I am still being cautious. High debt levels, global instability, and the US midterm elections in coming November could be a bit of risk. In times like this, one strategy I strongly believe is in keeping enough cash, maintaining about 10 to 15% in cash, either in Indian or US portfolios, gives flexibility. Cash allows you to stay calm when the markets are choppy and buy great businesses when valuations are right on pullback. In uncertain markets, survival and optionality matter just as much as returns. Uncertain markets demand patience, discipline, and quality. Focus on strong businesses. Don't chase short term momentum. Keep some cash handy. Let time do the heavy lifting. If you found this perspective useful, don't forget to like, subscribe, and share your thoughts in the comments. See you in the next video. Thank you.